unemployment dropped to 4.2%, which was good, and that's the recovery we're seeing. On the other side of that, though, there are 11 million job openings, which has created this competition for talent. It's a fierce competition and is driving wages higher.
Welcome to BuzzHouse, a Baker Tilly podcast where you can find all the buzz around multifamily housing. I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrick Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Each week, we'll bring you a guest or a topic in the multifamily housing industry that will help you win now and anticipate tomorrow. Let's get started. Back into the BuzzHouse today, Brent Maier is a managing director in our Baker Tilly Real Estate Advisory Group. I think this is Brent's third or fourth time. So Brent, thanks for bearing with us, and excited to have you back again.
Thanks for having me.
You bet. Brent's going to be joining us today to give an overview of some of his observations for the fourth quarter of 2021 in the multifamily housing industry, as well as just a few general economic overviews. Obviously, a lot going on out there. Before jumping in with Brent, we just have a few updates from around the industry, and all the updates today around state low-income housing tax credits, kind of very exciting for the affordable space. Very specifically, legislation was proposed recently in the Illinois House of Representatives, which would create a statewide annual cap of $35 million of state low-income housing tax credits. About 3/4 of this would be allocated to the Illinois Housing Development Authority, or IDA, and the balance would be to the City of Chicago Department of Housing, so about a 75-25 split. The credit would be a 10-year credit. It would be available for taxable years after January 1st, 2023. So definitely keep our eyes on that. That's obviously a large piece of credit, $35 million. Similarly, there was also legislation recently introduced in the Indiana Senate, which would create a state low-income housing tax credit to be used with 4% projects and taxes and funds. There would be a statewide cap of $30 million for fiscal years beginning June 30th, 2023. Finally, continuing the trend with state low-income housing tax credits, legislation was introduced recently in the Colorado General Assembly to extend the state LIHTC program through 2034, so another 10 years, and also increasing the cap from 10 million to 15 million. It just recently had gone up to 10 million, but again, just a very successful program. A lot of states have mirrored this program and what's going on in Colorado, so exciting to get that from 10 to 15 million possibly. So a lot of activity on the state front. As we know, it's great to be able states to be able to use their volume cap and so forth. So a lot of good news there. Now, excited. We're going to jump into our discussion with Brent, and I'm going to turn it over to Garrick. Garrick.
Thanks, Don. Always excited to hear about state credit activity throughout the nation. And Brent, thank you for coming back. You always remind me just how quick time flies, because it seems like only yesterday you were here for third quarter. But look, you've been on here for every quarter, giving great updates, but there might be listeners who may have not have chimed in last time to those podcasts. So before we jump into our questions, why don't you go ahead and let our listeners know a little bit about what you're working on at Baker Tilly's Real Estate Advisory Group.
Yeah, sure. First of all, thanks for having me again, Garrick and Don. Always a pleasure to spend some time with you. So background, have been in the industry for, I hate to admit it, 20 years. Have a great best-in-class team here at Baker Tilly where we provide valuation and advisory services, mostly in and around transactions, some compliance work after the transaction, providing purchase price allocations, impairments. We also are building out our private equity platform, having added several clients doing portfolio and fair value work for them on either a monthly, quarterly, or annual basis. We also work with our colleagues to help support their audit work throughout the firm, and have also done a lot of estate work, just given the pending tax or discussions around tax changes. So been a great move for us, and are happy to be here.
Awesome. So why don't we go ahead and start the discussion with maybe some general overall economic indicators for this quarter. So what are you seeing?
So we saw the fourth quarter was interesting. Labor markets continued to recover, but on the other side of that, we saw unemployment drop to 4.2%, which was good, and that's the recovery we're seeing. On the other side of that, though, there are 11 million job openings, which has created this competition for talent. It's a fierce competition and is driving wages higher. Compounding this problem of rising wages are the logistical challenges we're seeing, and then obviously with Omicron and the latest COVID variant has compounded these logistical challenges. Inflation is measured by the personal consumption expenditures. So if you think of the consumer costs, rose year over year 5.7% in November. And expectations are December numbers will come in similar. So wages are rising, but the fear is they're not keeping up with inflation. So net real wages are actually down. The Fed Reserve Open Market Committee is meeting this week, and expectations are they will indicate to the market that they're going to increase their rates starting in March. So we may see an uptick in borrowing costs. And then kind of along all of this, the stock market has been extremely volatile over the last several weeks, trying to digest the different labor market information, the economic news. We're entering earnings season. And then we have these tensions with Russia and China. Russia continues to build its presence along the Ukraine border, and now we're seeing NATO countries formulating their responses and sending support and capital and weaponry to Ukraine or neighboring countries. And then also over the weekend on the other side of the globe, we saw China send a large number of military aircraft on sorties near Taiwan as the U.S. and Japan were performing training exercises together. So there's a lot going on, and I think we're going to see some turbulence over the short term here.
All right, thanks for that intro, Brett. Actually, that was a pretty intense summary there with some global economics indicators there. But I'm sure all of this actually does play out eventually and trickles down into multifamily industry, right? So why don't we go ahead and dive into some questions there. So we know they've had a pretty strong run in the multifamily sector. So what are you seeing in the fourth quarter for multifamily performance?
Well, rents grew 11% year over year. Some markets hitting 20%, Tampa, Phoenix, and Austin in the Sun Belt. We've also seen markets that were hit hardest start to recover and show some nice gains, like New York and San Francisco, who were hit hardest in the pandemic, I should say. Similarly, we were seeing a shift in a return to the urban center, which is good for some of these submarkets, but we're seeing some positive rent growth there. And really driving the multifamily fundamentals has been the demand. Absorption in 2021 was over 600,000 units, which is more than double the average for the previous few years. So we're seeing investment capital. I talked about the turbulence in the equities, right? And so part of that, the flight from the equities is into real estate because of the attractiveness of the multifamily fundamentals. And so we're seeing record number of capital coming into the sector.
Yeah, thanks. I mean, I've noticed that as well. I mean, just going around and going to different conferences and just seeing there's just a lot of activity going on. So thanks for that summary. So, even keeping with multifamily, what type of actual trends are you seeing in the transactions activity?
So I would say the biggest summary would be we're seeing flight to quality. The fundamentals on the high-end properties have been strong as we're seeing a palette of our renters. They have a palette to pay, meaning they're capable and willing to pay higher rents for amenities, location, et cetera. So I would say the overall trend has been a flight to quality.
Good feedback there, Brent. Any other kind of other trends, takeaways, you saw in the fourth quarter to kind of wrap up the summary?
I think we're going to see these rent increases wane in 2022. And I don't think it's really a softening of the fundamentals. It's just our basis in 2020 was low. So I think artificially we're seeing rent gains a little bit higher than they would be. However, I do think there's going to be a lot of demand on the properties and with capital, especially given the equities market. Like I said, I think we expect to see robust transaction activity for the multifamily sector. Also, and interestingly, anecdotally, we've seen this, but we're also seeing it sector-wide, is there's a massive commitment to the single-family rental and the build-to-rent market. So I think we're going to see that to continue to expand and evolve.
Very good. Brent, really want to thank you for those updates. We'll have the quarterly report linked here to our website. And listeners, thank you for tuning in today. Thank you for listening to BuzzHouse. To receive a notification when new episodes are available, please subscribe to BuzzHouse, a Baker Tilly podcast, wherever you get your podcasts. For additional resources around multifamily housing, check out bakertilly.com. And if you have a suggested topic, please send them to build@bakertilly.com. That's BUILD@bakertilly.com.